Hello viewers, welcome to my channel. I am Hashim. Now I am going to start the problems on income from house property. Last two videos I have explained you in detail all the provisions how to compute the income from house property according to the provisions of Income Tax Act 1961. So before starting the problem, I expect my viewers that you have already watched all the theory videos and have the perfect knowledge of the provisions. If you have not watched, I suggest you go to the playlist of my channel. Select the subject income tax for the assessment year 23-24. Watch the two videos on theory, be perfect, then you can start the problems. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Without problems, you cannot understand my explanation. So take a screenshot of the points which I have written on the board, then I'll explain every point in detail. Now, see the first problem. On 1st April 2022, Sri Bhupesh is the owner of a house which is let out to Sri Mohan Lal on a monthly rent of 7,500 and received 3 months advance rent and 12,000 as deposit. First of all, the owner of the house is Sri Bhupesh and the tenant is Sri Mohan Lal. So actual rental value is 7,500 per month. But at the time of giving the house, the owner has taken a deposit of 12,000 and 3 months as advance. Remember one point. When the owner has taken a deposit, it is not the income because the deposit has to be returned. And the advance received, that will be adjusted in future rent. So whatever advance received or deposit received is not to be treated as an income. The municipal rental value MRV 60,000 per annum and the rent of similar building is 8,000 per month. Rent of similar building is the FRV, fair rental value. Sri Bhupesh incurs the following expenses: municipal taxes 6,000 allowed, insurance fire 300 not allowed. Remember, only two deductions are allowed: standard deduction under section 24A and interest on loan under section 24B. No other deduction will be allowed for insurance, ground rent, repairs, collection charges, etc. Interest on loan taken to construct the house, it is allowed as deduction under section 24B. And ground rent not allowed, ignore. Repair not allowed. Collection charges 500 not allowed. Compute the income from house property for the current assessment year. The current assessment year is 23-24. So here the solution is Sri Bhupesh assessment, computation of income from house property for the assessment year 23-24. So first of all, the format as usual. Gross annual value will take, from that deduct the municipal taxes. Then we'll get NAV, net annual value. Less deductions under section 24. So two deductions, 24A, standard deduction, 24B, interest on loan. Then we get income from house property. In working notes, we have to show how we got the gross annual value. In the theory video, I have explained you gross annual value will be ascertained by considering municipal rental value, fair rental value, actual rental value, standard rental value. By considering these four, we have to find out GAV. If standard rental value is not given, that means the house is not governed by Rent Control Act. In this first problem, SRV, standard rental value, is not given. So no, the house is not governed by Rent Control Act. So how to calculate GAV? In working note. Calculating ERV. ERV stands for expected rental value, which is higher of the following two amounts: municipal rental value MRV and fair rental value FRV. So in our problem, municipal rental value MRV is given 60,000 per annum, whereas fair rental value is given 8,000 per month. So 8,000 per month into 12, so per annum 96,000. Whichever is higher is the ERV, expected rental value. 96,000 is the ERV. Secondly, find out the ARV, actual rental value. The actual rental value is given in the problem 7,500 per month into 12. You will get 90,000. Right? So calculating GAV. GAV is higher of the following two: ERV or ARV. ERV, how much we got? 96,000. And ARV we got 90,000. Whichever is higher, 96,000 is higher. That is the gross annual value. So take this 96,000 here. Now municipal taxes paid by the owner will be allowed. So in the problem it is given municipal taxes paid by the owner 6,000. Deduct 90,000 is called net annual value. From NAV, deduct two deductions. Standard deduction is a compulsory deduction. Every problem, whenever SSC is having income from house property, he will get standard deduction under section 24A. 30% of NAV. So 30% of 90,000, you will get 27,000. Now interest on loan taken to construct the house, it is given in the problem 14,000. Allowed as deduction, 24B. Take the total 27 plus 14, you will get 41,000. 41,000 is the deduction, that's why I am putting in bracket. Bracket denotes deduction, minus. So here 90 minus 41 is 49,000 is the income from house property of Sri Bhupesh. That's all. So in working note you should write down that advance money received by the owner and deposit money received by the owner from the tenant is not an income. It should not be treated as an income. Secondly, ground rent, insurance, repairs, collection charges, no deduction will be allowed for all these payments made by the owner, because one common deduction is given, that is standard deduction. That will take care of all these. So we have to ignore all these deductions. That's all. This is the end of problem number 1. Now second problem I am reading out. Mr. Raghava Reddy is the owner of a house property whose municipal valuation is 2,50,000 per annum. MRV 2,50,000. Standard rent is 3,60,000 per annum. This is the new point. Previous problem standard rental value was not given. Here second problem SRV is given. That means the house is governed by Rent Control Act. That point you remember. And this SRV will be considered while calculating GAV, gross annual value. Now it is let out on a monthly rent of 25,000 per month. So per month 25,000. So 25,000 into 12, 3 lakh is the actual rent. Fair rental value 2,10,000 per annum. Municipal taxes due 30,000, out of which 15,000 is paid so far. The provision for Income Tax Act says municipal taxes will be allowed as deduction only on payment basis, not on due basis. The total municipal tax is 30,000, but the owner has paid only for 15,000. Only 15,000 will be allowed. Right? Other expenses, repair, ignore. Insurance, ignore. And interest on loan taken to purchase the house, allowed. Interest on loan taken to purchase the house, construct the house, repair the house, renovate the house, or reconstruct the house will be allowed. So previous problem it was loan taken to construct. Now here the loan taken to purchase, allowed under section 24B. Then the tenant has not yet paid last 1 month rent. This is called outstanding rent. Income Tax Act is not bothered whether rent is received or not. The tax will be calculated on the rental value of the property. So this outstanding rent will be added to rent received. 11-month rent he has received. 1 month rent the tenant has not paid. It is not called unrealized rent. Unrealized rent is something different. In the next problem we will discuss more about unrealized rent. Here the tenant has not paid. He will pay in the next month. So it is not unrealized. It is realizable. So it is outstanding. Now find out the income from house property for the current assessment year. 1 or 2 new points we are coming across in this problem. First of all, Mr. Raghava Reddy, computation of income from house property for the assessment year 23-24. Same format, GAV minus municipal taxes, net annual value, less deduction under section 24, income from house. Same format you have to make. Now in working notes we calculate gross annual value. The new point in this problem is SRV is given. So in 3 steps we are going to calculate the GAV. First step, ERV, expected rental value, is higher of the following two: municipal rental value, fair rental value, MRV, FRV. In our program it is given MRV 2,50,000 and FRV 2,10,000. Whichever is higher, 2,50,000 is higher. So ERV 2,50,000. Next step is adjusted ERV. Here SRV is given, that's why we are calculating adjusted ERV. Previous problem we have not calculated adjusted ERV because SRV was not there. So whenever SRV, standard rental value, is there, the new step, adjusted ERV, is lower of the following two. Lower of the following two. First one, ERV. How much ERV we got? 2,50,000. Secondly, SRV, standard rental value. In our problem, standard rental value is 3,60,000. So 2,50,000 or 3,60,000, whichever is lower is the adjusted ERV. So here we got adjusted ERV 2,50,000. Next step, we have to calculate ARV. Actual rental value is the rent received plus rent outstanding. 11-month rent he has received, 1 month rent is outstanding. So 25,000 into 11, you will get 2,75,000. And 1 month rent is outstanding, not received, that also should be added. So 2,75,000 plus 25,000, 3 lakh is the ARV. Now finally, last step, GAV is higher of the following two amounts: adjusted ERV or ARV. Adjusted ERV, how much we got here? 2,50,000. So adjusted ERV 2,50,000. And ARV, actual rental value, is 3 lakh. Whichever is higher, so 2,50,000 or 3 lakh, whichever is higher, 3 lakh is the higher. So GAV, gross annual value, is 3 lakh. So I have taken 3 lakh gross annual value here, minus municipal taxes. Just now I told you municipal taxes will be allowed if it is paid by the owner, only payment will be allowed. If it is due, not allowed. So out of 30,000, only 15,000 paid. Deduct 15,000. So 2,85,000 is the net annual value, NAV. From this, deductions under section 24, standard deduction under section 24A, compulsory deduction, 30% of NAV. 30% of 285, you will get 85,500. Secondly, interest on loan taken to purchase the house, allowed fully, 45,000. Then add up 85,500 plus 45,000, 1,30,500. Deduct to 1,30,500. You will get 1,54,500. This is the income from house property. In working note, you should write down, outstanding rent from tenant cannot be treated as unrealized rent. If unrealized rent is there, it would have been deducted from ARV. But it is not unrealized. The tenant will pay it in later or afterwards. Then actual amount paid for municipal taxes will be allowed, due amount is not allowed. Interest paid on loan taken to purchase the house will be allowed as deduction. So in this video, two problems, first and second problem, I have explained you in detail. Inshallah, the next problem will continue in the next video.